Hi, everybody, and welcome to the Executive Buying Weekly Market Wrap for August 25th, 2017. What's happening here this week is we were actually taking a look at the overall S&P 500 ETF, the spiders, the daily chart is what we're looking at. And one of the interesting things to point out is that despite all the news and all the back and forth politically, the hurricane possibly shutting down oil refineries and Jackson Hole, which is a meeting where a lot of the Federal Reserve, including Janet Yellen, was speaking. We're still in this consolidation. So the market has been either going sideways or lower since August 1st. So the entire month of August, you could see these two little downtrend lines and this little channel that we're in. We just continue to trade in this channel and stick with it and not break out of it. So until we start to see a breakout to the upside or a more steep downside, we're probably going to be in this consolidation range maybe till the end of the summer and kind of see what happens when the big boys get back on the trading desk and not just the JV team. So what's happening is today we actually tried this morning to kind of break out. It failed. We're back down, and I don't know if you can notice this, but after hours, we're down a little bit because there was news out. This is Friday, so Friday evening, that North Korea shot off another three missiles, not at Guam, just near Japan or the Sea of Japan. Um, so they're kind of raising their head again, and here's the thing, and I know you kind of hear me repeat the same thing every week, but the reality is you cannot let this bother what you're doing or trying to accomplish in accumulating wealth if it's not within your time frame. So for me, what we're doing is we're looking at this from a bigger picture. And this is a monthly chart of that same ETF, the S&P 500 ETF, the spiders. And what we're going to see here is that basically since 2009 and onward, we have a continuation of an upward trend. So, yeah, I know we talked about this before, but this little pullback in the last month there may be the top. That may be the top of everything, and it could go down another 30%. And if it breaks the uptrend and it continues to create a downtrend, you'll hear me sing a different song. But for right now, it's not time for that. Second thing is looking at the NASDAQ 100, the triple Qs. This is a monthly chart as well. We see the same sort of deal where overall we're in an uptrend that's showing us that there's more demand than supply for markets. So the other thing I wanted to just touch base on is a moving average. So you see these candlesticks that some are red, some are green. That's denoting how the day was, or in this case, how the month was for that particular month. And then there's these smoother lines, a silver, a gold one, and a blue one. And those are moving averages. So a lot of times people look at the 200-day moving average. And what is that? That is a way so that we get to smooth out all the gyrations, the daily panic and greed that happens every day. And we could actually take 200 of the closes, add them all up, and then divide them by the number 200. And then every day that goes by, you add the last one and you remove the 201st one in the past. So what winds up happening is you're always getting a smooth line, like these blue and gold lines, of what's happening in the market. And that allows you to kind of just turn down the noise a little bit. And I know that's kind of been a theme of mine for the last few weeks, but that's kind of what you have to do right now. You can't worry about every single little thing because if you do, you will never invest a dollar because everything sounds like the world is ending all the time. I mean, I know plenty of people for a very long time that would buy gold and guns and dig a nuclear bomb shelter in their backyard. And obviously, I'm exaggerating, but my point is there are those type of people out there, and it doesn't mean it's a bad thing. But the problem is that the end of the world only happens once, and if you're right, you don't win anyway. So let's go ahead and look at what is probable, not possible. Obviously, it's possible that some crazy stuff happens and the whole system blows up. But that's not how we live our lives. We live our lives by following what is probable, and it's probably not going to happen. So let's just continue to stick with what the trend is what the trend is doing. And as we all know, if you're sticking with the trend, the insiders are still buying shares, we're still adding insiders to the focus list. We're going to be able to make money in the times that the world doesn't end, which is just basically 100% of the time up until this point. So let's continue to follow the upward trend. If you want to incorporate moving averages into what you're doing, some of the best investors in the world have always said that you don't want to buy things that are below their 200-day moving average, and you want to try and stick to things that are above their 200-day. And all that is, it's a simple guideline that shows us that when the price is trading above, it allows you to see that there's more demand than supply for that particular underlying investment, whether it is the S&P 500 or individual stock. It might be something that you want to take a look at. So nothing's perfect. Insiders aren't perfect. 200-day moving averages aren't perfect. Technical analysis isn't perfect. Even following trends could get you caught up every once in a while, but what you have to do is you have to go with the probability of success. And these are all things that put them together. You wind up getting a much better probability of success than dealing with emotion. So hope you guys have a good week and weekend. And I definitely will have the people in Texas in my prayers. They're probably going through a pretty tough time, and I'd imagine they're probably not watching my newsletter video here, probably preparing for the storm. So good luck to you guys and everybody else. Hope you guys enjoy your weekend. Thanks so much.